Alrighty. Good afternoon and welcome to Business After COVID-19, PPP Loan Forgiveness and Recovery Best Practices. I'm Jessica McClellan and I'm going to be your moderator for today's event. Thank you for joining us. Before we begin, a few housekeeping items. During the presentation, all participants will be in a listen-only mode. There will be a question and answer session at the end of the presentation using questions submitted via the chat feature at the bottom portion of your screen. Please type your question into the dialog box and click the send button. When you submit your questions, please make sure that you select host. We will attempt to get through as many questions as possible. Please note we will be providing a recording of today's webinar to our attendees. So let's get started. As government lockdowns are being lifted across the country, business owners are shifting their focus to the restart of their operations. Understanding and maximizing PPP loan forgiveness and having the right tools to plan your recovery are top of mind. With that, we wanted to share with you some of the latest guidance, provide you best practices, and answer some of your most questions to help you navigate these complex waters. With us today, we have a stellar panel, which includes Kate Matz, a WVC partner and the firm's advisory services practice leader, Mike Hanf, a partner in our tax department, and Michelle Clement, who is also a partner and serves as the co-leader of the firm's tax practice. I hope you enjoyed today's presentation and find the information useful. Kate, with that, the floor is all yours.
All right, well, thanks, Jessica. So we are going to focus on forgiveness today, given what we currently know, but most of you that are on the line have been following this at least somewhat as things have gone on here. And you know that this PPP program is ever evolving. It's not every day that we're getting new guidance, but sometimes it feels like it. So we'll give you the latest and greatest where we sit today, some thoughts on where we think some potential changes might be coming, and just caveat it all that it is a little bit subject to change. So we'll try to get through our prepared comments here and leave plenty of time for question and answer. So I'm going to start out first just going through some basics on how the forgiveness calculation works, and we'll talk a little bit about each of the items, and we'll save some of the real deep dive when we get into some of your questions. So the first part of forgiveness is to look at your total payroll cost and your eligible non-payroll cost, and then you add them together and come up with this total cost. So this is for costs that you incur during your 8-week covered period. Total payroll plus the eligible non-payroll expenses gives you your total eligible cost. Then you move into step 2, which is where you start looking at some potential reductions that you might have to take to that amount. The first thing that you do is look at payroll divided by 75%, and that gets you the amount for this payroll 75% requirement. So this is a requirement that's actually not part of the CARES Act law, but was later added in administratively. And what it says is that in order to achieve full forgiveness of your loan amount, you need to spend at least 75% of that on payroll. The purpose being they were really trying to get money in the hands of companies so that they continue to pay employees and keep them off of unemployment. So we've got that 75% rule to kind of deal with here as part of step 2. The other piece of step 2 is to look at if you need to take a wage reduction or an FTE reduction. So you've got your total eligible cost, then you look at, did you reduce wages by 25% or more? And if you reduce them by more than 25%, you're going to potentially get dinged on the amount that you'll be able to have forgiven. And then same thing with FTEs. You look at your FTEs during your covered period compared back to a base period. And if you have fewer FTEs, you might have to take a reduction there too. So that comes up with your modified total forgiveness. Then you move into step 3, and here's where you compare 3 different amounts. So you compare the payroll 75% requirement that you calculated in step 2, you compare that modified potential forgiveness that you calculated in step 2, and then you also look at what your actual loan amount was. So you have those 3 figures, and you take the lesser of those 3 as the amount that you'll be able to have forgiven of your loan. So what does that mean? So 1, you can't get forgiven more than the loan amount that you received. That makes sense. 2, you're not going to be able to get forgiven more than that payroll 75% requirement, right? So you're going to be capped if you spend something less than 75% on payroll to the amount that you're going to be forgiven. And then you also have to look at, did you have wage or FTE reductions that are going to count against those total eligible costs? So let's talk about each one of these components in a little bit more detail here. So for payroll, something that was just newly kind of concocted 2 Fridays ago when the SBA and Treasury released the forgiveness application and the instructions to that application, this concept of alternative payroll covered period. So now you've got actually 2 different options for the 8 weeks that you use when you come up with your payroll costs. We'll go into an example on that here in a minute. We do have this $100,000 annualized limit, so that means 8-week period, you can only include $15,385 of payroll costs per person. That's what the kind of annualized equivalent for $100,000 would be. Payroll is on gross pay, so we are still getting some questions about, is it gross pay, is it net pay? What do you do with taxes or other sorts of withholdings or deductions that folks might have? It is gross pay. So you start out with the gross pay that you paid to your employees. Then you add in company paid health insurance, company retirement contributions, and then also the state unemployment taxes that the company paid. One thing that unfortunately was just kind of clarified through some recent guidance is that any owners, self-employed folks, partners in a partnership, the non-cash compensation, so those benefits amount towards this. It is only those amounts you paid for employees. All right, so let's look at some examples of this covered period versus the alternative covered period. And I'm a visual person, so I kind of wanted to sketch this out. It's not the prettiest. I didn't give marketing much time to pretty it up, but hopefully this helps kind of walk through the concept a bit. So in this example, we've got a company who got their loan on May 6th, and that would mean that their traditional covered period or standard would begin on May 6th. So that's where you can kind of see the various weeks sketched out there. The gray box beginning week 1 is May 6th, and the gray box on the right-hand side, the end of week 8 is 6/30. So in this case, I'm just using $10,000 as a standard payroll amount that they're paying for each of their pay periods. And if we kind of sketch this out here, so the orange bars represent the payroll periods. The blue represent the date that the payroll is actually getting paid. So if we look at the first payroll, that runs from April 27th through May 10th. So if we begin our 8-week period on May 6th, and we have that first payroll get paid on May 14th, we get to include that full $10,000 as part of our forgiveness calculation. Because we can include everything that's paid during the period as well as things that are incurred during the period. So we pick up that full $10,000 paid on May 14th. Then we go out, and every 2 weeks we've got an additional $10,000 that we're paid. Once we get to the end, though, we've got this last payroll on June 25th that makes it in as being paid. But then we still have some additional payroll that's been incurred but not yet paid. So we've got 7 days of payroll there that's been incurred at the end of the period, hasn't been paid. In the case of my simple math, that's $7,000. So that means we've got $47,000 that we can include in this forgiveness calculation for the covered period. Now, if we flip and look at how that works for the alternative payroll covered period, we've got the same fact pattern as far as the loan date being May 6th, but what we've done here is shifted to use this alternative payroll covered period. And what that allows you to do is start your covered period for payroll cost only on the first date of the first payroll after you've received your loan funds. So in this case, receive the loan funds on May 6th. The first date of that next payroll period is May 11th. So that becomes the first day of our alternative payroll covered period. And so then that goes through July 5th. So we've got our beginning date of May 11th, our ending date of July 5th, and we kind of sketch out those same payrolls and see how things kind of shift a little bit here. So that first payroll of April 27th through May 5th, or sorry, through May 10th that we had before, it's paid on May 14th. So that still gets to be included in our forgivable amount. Then we go on those next, every 2 weeks, we have the additional $10,000 come in. We get to the end of week 8, and we don't have a payment that week, but what we've done now is we've actually incurred a full 10 days worth of payroll that is going to get paid on that next pay period. So since we can include things that are paid and we can include things that are incurred, we get to pull in that whole $10,000 of payroll that was incurred in those last 2 weeks that haven't been paid yet. So our total payroll costs are $50,000. So hopefully that helps to kind of show you how you can actually put a little bit more than 8 weeks worth of payroll in with the paid and the incurred, and that it pays to also look at this alternative payroll covered period. See if, one, you're eligible. So you're only eligible to use it if you have a bi-weekly or more frequent payroll cycle. And then 2, sketch out your specific pay period dates compared to when your loan funding date was, and see if you get some benefit from shifting to this alternative payroll covered period. All right, so that gets us through payroll. Let's talk about the eligible non-payroll costs a bit. For these, you are stuck with the traditional covered period of that 8 weeks starting the day that you receive your loan funds. No flexibility right now on that. Potentially could be coming down the road. I think we'll hit on that later on here. This includes mortgage interest on both real and personal property, rent on both real and personal property, and utilities costs. One thing to note is that all of these agreements must have been in place prior to February 15th of 2020. Purpose being, they're looking at helping companies continue to operate in the same way that they were pre-COVID. These funds were not really, to be used for the purposes of some sort of expansion of operations. They're really just to kind of allow businesses to continue with their ongoing operations that they had before. 2/15 happens to be the date that they picked and drew a line in the sand to say, pre-COVID and post-COVID. So make sure that those are in place before then. All right, now let's take a look at a little bit more of the specifics with a couple of these reductions here. So for the wage reduction, if you have reduced employee wages by more than 25%, you're going to be looking at a proportional reduction to your forgiveness amount. You do get to throw anybody out of the calculation that earns over $100,000. And the way that this is measured, again, is pretty goofy. They certainly didn't make it easy to go through and kind of do the administration of looking at all of these things. But it is a 2019 measurement for 100,000, and it's not the full year of 2019. It's actually if you take any individual pay period for 2019 and annualize that out, if that gets you to $100,000 or more, you can exclude them from the calculation. So you might have some folks that when you look at their full year W-2, they earned less than $100,000, but maybe received a large bonus in a particular pay period. If you look at that specific bonus pay period and annualize that out, if you get to over $100,000, you can exclude them from the calculation. This last bullet point here, the devil's in the details with a lot of these things. And like I said, they haven't made it easy. There's a lot of different measurement dates. Some of them are point in time. Some of them are actually ranges. Sometimes it corresponds back to your covered period. Sometimes it's a pretty arbitrary date. So the devil's in the details with kind of working through these things. For the wage reduction, this is one where an arbitrary date comes into play. And you actually look to see if you reduce wages between 215 and 426. If the answer is yes, and you bring them back up to their pre-COVID wage by 630, then you fall into the safe harbor category and you have no reduction here. Again, this is something that kind of just takes a little bit of working through. All right, so that's wages. Let's talk on FTE reductions a little bit. So FTE means full-time equivalent, and this is calculated off of a 40-hour work week. That was a bit of a surprise to everybody when that came out, I think it was 2 Fridays ago now as part of the application. Previously, everybody was thinking that it was going to be based off of a 30-hour work week, but it is a 40-hour work week. So again, you're going to look at what sort of what your FTEs were during your covered period compared to a base period before. You have some options on a base period. If you have a reduction, you're going to take a reduction to your forgiveness amount. There is a similar safe harbor with the FTEs as they are to the wage reductions. And again, that's looking back at that 215 and 426 time period and saying if you had a reduction between those dates, brought it back up by 630, you meet the safe harbor and no reduction. All right, a couple of notes here. So I've referenced a few times this forgiveness application that was released a couple of Fridays ago. I think it's about an 11-page document. Most of it is instructions. You know, it's a little bit complicated when you get into the FTEs and the compensation pieces. That these all are employee by employee, so you really kind of have to list out everybody that you've had on the payroll for a lot of different time periods and then do a lot of math and comparison. So it's a bit burdensome as far as, you know, the administration and just working through all of that. We were hoping that they would simplify some things for us, but haven't gotten there yet. We do have a forgiveness calculator that we'll be launching later today that will help with some of that. You'll still have to pull all the information and put all the employees in, but the math and all the comparisons will be done for you. And then it will spit out at the end the exact numbers that you need to put on each line item for the application and provide you with the attachments that you'll need for some of your tables. So look for that on our website later on today on the COVID-19 resource page. All right, with that, I'm going to turn it over to Mike to talk about some best practices. Hey, Mike. Mike, you're muted.
Thanks, Kate. Sorry about that. So one of the things that we were trying to think about internally is maximizing the forgiveness. And one of the things I guess I encourage everybody to think about is actually taking our calculator and going through some of the math and then reading some of the rules. I can tell you that from my personal experience, it seems to just not make a lot of sense in the beginning. And if you read just the rules and try and make sense of it, you're kind of left a little bit lost if you just kind of try and look at the formulas. So one of the best ways to try and maximize the forgiveness and try and understand exactly how this is going to work is really use our calculator, but then also have the forgiveness application and read the rules and kind of go back and forth. And it does start to click a little bit. To Kate's point earlier, you're going to struggle to find maybe logic in some of the dates that they chose, but nonetheless, you'll kind of start to catch on to at least how it is going to work. So when we think about maximizing the forgiveness, Kate already made this point earlier, it's worth emphasizing. The way it currently reads, it truly is during the 56 days, all the payroll that is actually paid within those 56 days, but then also the payroll that is incurred. Conceptually, it's really at the back end. So incurred during that pay period, but then paid in the next normal cycle, right? So really trying to analyze the covered period versus the alternate period and determine how do you maximize the paid plus incurred element that is within the rules. And then if you think about this paid and incurred concept, and you start thinking about, well, how about during the 56 days we give people bonuses? And how about during the 56 days we give individuals hazard pay? Actually, in the interim final rules that came out on the, I think just the 15th, maybe just a couple of days ago, they actually clarified that bonuses and hazard pay are going to be allowed in payroll for the 56 days. One thing we should always be mindful of is this $100,000 annualized maximum. So you kind of get two different numbers if you think about $100,000 divided by 12 times 2 versus $100,000 divided by 52 weeks times 8 weeks. So it's the divided by 52 times 8 is the correct math, and you're going to get 15,385 is the maximum amount that can be forgiven during that 56-day period. So when you're thinking about bonuses and hazard pay, it's not $100,000 in that 56 days. It's an annualized $100,000 within that 56 days. So you're going to be maxed out at 15,385 per employee as it relates to the pay. So if you take the pay paid and incurred plus the bonuses and the hazard pay, if you're going above that 15,385, you're not going to get additional benefit in the forgiveness calculation. The item we wanted to call to your attention as far as the profit sharing contributions is two different fact patterns. One fact pattern, we have a 2019 bonus plan that by the time we pull our financial statements together, have some board resolutions, finalize what the payout's going to be, it would normally fall within the 56 days. Second fact pattern is, we still have a bonus plan, but with everything going on, we've intentionally delayed. Or maybe it doesn't typically get paid out until September, October. And if on a historical basis, it's going to fall outside of that 56 days. We've been internally kind of brainstorming as far as advising clients. Currently, the way that the law is written, if you have profit sharing contributions in either of those scenarios, whether they be paid normally during the 56 days or not normally during the 56 days, if they are actually paid during the 56 days, they will be included in the forgiveness calculation. This may be prorated comment that we have here. We're trying to kind of get a little bit ahead and guess where potentially the SBA and Treasury could be going. It just feels like this could be a bit of an area for some abuse. I wouldn't be surprised if there's not some clarification as it relates to like profit sharing contributions, larger amounts that occur within that period. However, we still have the 15,385 limit during the 56 days. So potentially we're not going to get any limitation because we already have this umbrella 15,385 that just applies to everything. So really trying to maximize the forgiveness on the payroll side, given the 75% rule, is a bit of the easier answer. Every bit you put into payroll, you make the 75% rule all that much easier. But again, once you get to 15,385 per person, we've really maxed out any of the strategies we can employ specific to the payroll cost. The next item down here, and this is just another thing that from a logic standpoint, you can't quite kind of see where their logic was going. But when you read through the forgiveness application, it specifically states that prepaid interest is not included in the interest calculation. However, it is silent as it relates to rent. So if we have a lot of payroll, we've exceeded the 75% test, so we've got 85% of our payroll of the forgiveness calculation is attributable to the payroll cost, and we have some rent out there. As the law is presently written, one of the strategies could be to go prepay some of your rent within the 56 days to increase what the forgiveness is going to be. So those are just some ideas out there as far as maximizing the forgiveness. on the slide too, it's not on here, but I did want to point out, Kate went over it a little bit as far as if we're thinking about the FTE reduction or the wage reduction. I think a lot of folks were thinking that the June 30th was a bit of a cure-all. As long as I brought people back by June 30th, as long as I increased their wages back to normal levels by June 30th, that would be a bit of a cure-all. We had it earlier. I just want to kind of re-emphasize it. That June 30th rule only relates to FTE reductions or comp reductions from the period February 15th to April 26th. So if there's an FTE reduction that occurred in May, or a rate of pay reduction that occurred in May, the reestablishing the FTEs or rate of pay by June 30th does not cure that. The reduction had to have occurred within that window of time. So if we're looking to maximize forgiveness by bringing people back on board by June 30th, I just wanted to call that to everybody's attention. As Kate said earlier, with all this stuff, the devil's in the detail. So from a perspective of, so what should I do next? As Kate said, we're going to have a calculator going out this afternoon. It really is worth everybody's time. Take the calculator. It's going to be very complicated in the beginning, as just the application is very complicated. But when you work through it step by step, you'll kind of see how it starts to work, and really take the time to plug the numbers in and really see what of the total PPP loan, what portion is going to get forgiven. I mean, we can think of the different scenarios. We got certain industries that are very heavy in the payroll side, just have highly compensated employees that darn near everybody's going to be at that 15,385. And so you might find out that, boy, 100% of the PPP loan is going to get forgiven. And so you really don't need to do a lot of work as far as some of these strategies. You also might find out that, wow, I'm not going to get 100%, I'm only going to get 80% or 90% or 40%. The calculator is going to allow you to see where is that reduction coming from. Is it coming from the 75% kind of payroll requirement? Is it coming from an FTE reduction? Is it coming from a wage reduction? And really knowing where the reduction is coming from is going to help you reverse engineer, well, how can I try and make that reduction go away? So really estimating your forgiveness is a key critical next step for anybody that has not kind of started to already do that. If we look at a couple of different scenarios, one thing that we want to make sure to always emphasize is just good business sense for the company. Not only good business sense for the company to kind of stay within kind of the intent of the rules as it relates to the PPP loan, but also just good business sense for the company just as it relates to spending money. So we have this nuance in the calculation of the FTE and wage reduction. Let's park that off to the side for a second. If we don't have a FTE reduction or a wage reduction, we just simply can't spend all of our PPP money during the 56 weeks or days. And so we got $1 million and we spend 800,000 of it. This good business sense comment is really meant to say, keeping $200,000 as a 2-year 1% loan is still better than misspending the $200,000. Once we spend the $200,000 and it's not forgiven, we still have to pay it back within that 2-year as time frame if it's not going to be forgiven. So if just making sure that if it's not going to get forgiven, only spend the money if it just makes good business sense. So if we're going to do good business sense, and we say, okay, so employees, even if there's no work for them to do, with the $600 extra of unemployment, with every industry really values their employees, and it's kind of they are those who kind of make the company work. So I think it could be a strategy to try and get some of those people back earlier, so they don't get scarfed up by some other companies. So kind of makes sense at the times to pay employees even if there's no work to do, to lock them up and I guess get them back on the payroll. Considered hazard pay, mandatory vacations. We had that kind of earlier. Really, this is kind of from a timing standpoint. If the industry you're in is going to have a bit of spike of activity in the 3rd and 4th quarter, having some mandatory vacation now so you have your full staff back on board in the third and fourth quarter when things might be a little bit busier. Consider rehiring, but at a reduced compensation. Again, you just got to work through the calculation and understanding what might not be forgiven. But still, I think there's scenarios that could make sense to rehire people, bring them on board, get them trained back up, but at a reduced compensation. By really looking at the forgiveness calculation and reverse engineering, I think you're really going to be able to get creative as far as how to reduce some reduction in the forgiveness if you're going to have any. If you've received money, it's not going to get forgiven, and you're saying, boy, 2 years really just isn't that long of a time. We certainly have clients that are just probably going to end up at the end of the 56 days, whatever they haven't used, just go ahead and return the unused funds. Also, there's just the option, again, I mean, 2 years really isn't all that long a time, but nonetheless, just hold on to the cash and repay it later. Really just staying focused in on cash flow. There's really no provisions for any sort of extension. So when we're at the end of the 2-year term, there's really no provision for extension. We're going to, anything that hasn't been forgiven, we're going to owe that money back. And then the other thing, the application, the last page of the application that is online has an entire full page as far as documents that are going to be required from each borrower for the forgiveness application. Go ahead and just read through that line by line. And as you're going through the calculator and as you're dropping the numbers in the calculator, really going through kind of everything that is required on that application, and go ahead and pull all that documentation now and keep it organized is another just suggested next step.
Now I did it, I was muted. I'm going to add in one more next step, and that is to stay tuned. So there are a couple of different bills that have been introduced in Congress that look like they might have some legs that could change various components of this. So one of those looks at extending the 8-week period out to 16 weeks. One looks at extending it out to 24 weeks. There is also a proposal to change that 75% payroll requirement and provide some more flexibility there. And then there's also some talk of actually extending the payback period, that 2 years now, making that something like 5 years. So I don't think we've gotten I don't think we've heard the last of guidance from the SBA and Treasury, and Congress might also be weighing in as well. So stay tuned as new things develop. We'll be pushing out blog posts and email updates, and we do have another webinar scheduled for this next week. So if anything happens between now and then, we'll certainly be updating you on that at that time. All right, let's go over now and tackle your questions. Michelle, you got the
I do.
Awesome.
Have a number of really great questions coming in through chat. We'll go back up to the top and start to go through those. My PPP 8 weeks ends on June 9th. Since we have been in this from the beginning, will we be grandfathered from any changes? I can see that being positive and negative. You might want to be grandfathered to avoid being impacted by changes, but you might want to be grandfathered to be able to take advantage of the changes too, depending on what the changes are. At this stage, all the changes apply to everybody. So I think from a positive standpoint, absolutely, you're going to get the positive side of the changes. If there happens to be some negatives, you get those as well. I don't know if anybody else has anything on that.
I agree.
All right, so the next question is, can you go into detail on owner's pay? So owners who are employees of a corporation, S Corp or C Corporation, and get a W-2 are going to be limited to the $100,000. That's $15,385 for the 8-week period. Self-employed individuals, the same thing. Schedule C or if you're a partner in a partnership, it's that $100,000. The unfortunate result that came from that application that came out on May 15th was that they also indicated that an employee of a corporation who is an owner is going to be limited to that $100,000 and not include any health insurance or retirement on top of it. Originally, and if you look at the law, it doesn't say that specific to employee owners. It says that specific to self-employeds. But at this stage, the guidance is indicating that for an owner, $100,000 is the cap, no additional health insurance or retirement. Anybody want to add to that?
So unfortunately, the other thing that it did was it also limited the amount to whatever the compensation was in 2019. So if you were actually compensated lower than $100,000 in 2019, you're going to be limited for your forgiveness to 850 seconds of whatever that amount was. So some unfortunate news for the self-employed. For sure.
Yeah, I mean, it's fascinating how as they continue to release guidance, it doesn't get easier. It gets way more involved and complex.
Yeah, for those of the, just one more, I'm sorry. For those that get a W-2, knowing 19's compensation is easy. For those that are maybe self-employed, really what they're getting after is what's subject to self-employment taxes. So take your 2019 return. Typically that's off of Schedule C, or if you're a farmer, Schedule F. But what they're really getting after is what is subject to self-employment is 19, is your compensation for 19 if you're self-employed.
Right. On to the next question. Can you be paid over 75% for payroll costs of your loan, or does this have to be 75-25? The whole intent of the program, and it's PPP for Paycheck Protection Program, is to encourage payroll during the 8 weeks. So if you can use it all on payroll, it's all forgivable as payroll. It's just in the event that you have greater than 25% being those non-payroll costs that you would be restricted. Next question. I've received the PPP at $66,000 and an EIDL, the EIDL $10,000 grant. Am I able to justify $76,000, or will I be capped at 66 and have to return at least 10? The question there has to do with how that EIDL grant impacts forgiveness. Unfortunately, forgiveness will be reduced by the amount of the EIDL grant. So you could spend $66,000, but when you go in for forgiveness, they will reduce that by 10. So forgiveness would be at $56,000. So you don't have to return it, but forgiveness is going to be net of your EIDL grant. Next question. Would reduced overtime be a wage reduction to be considered when calculating the forgivable amount? I think it will, because you just compare the annualized pay during your covered period to a period that was from February until April. If you happen to have overtime then and you annualize it, you're going to be calculating a reduced wage. The thing to keep in mind, though, is if your staff, if your employees are on an hourly rate, we look at the hourly rate. And as long as you are still paying the same hourly rate to them during the cover period compared to that former period in February through April, you're good, you're done. that hourly rate did not get reduced, so go there. That is a very involved calculation, and hence the reason our calculator has gotten more intricate, let's say. There's additional question here. What all is included in utilities? Are cell phones and internet services included? I think the easy answer to that is yes, those are utilities. I think the interesting thing is that gasoline for business vehicles is a utility. Interesting and awesome. You know, you can include gasoline. So it's kind of a be creative and make sure you're thinking outside the box a bit, and you know, trying to capture everything that is potentially going to be included in forgiven expenses. We have implemented shift premiums to ensure social distancing in our production facility. Should this be treated as a type of hazard pay or as normal wages? I think ultimately it doesn't really matter. You're going to include all the wages as wages during the stated period of time that you have to calculate it. So if you're paying it, as long as you know, the recommendation is to have the documentation for the purpose, and you've already indicated they're to ensure social distancing. So as long as you document that, you can therefore have the support for what you do pay, and it's just going to be part of compensation. Is dental, life insurance, and LTD, the long-term disability insurance, included in the PPP for forgiveness? Yeah, the employee benefits that you pay for insurance will include vision, dental, life, long-term disability. You know, I'm not sure about life and long-term disability. Kate, is it just health, dental, vision, health insurance type stuff?
You know, it doesn't go into that much detail
Okay.
in any of the guidance, but I have been including it with the calculation I've been working through. So we included it on the front end to come up with the loan amount, and we'll be including it on the back end on the forgiveness. And, you know, I think in gray areas like that, err on the side of putting it in and, you know, make the bank come back to you and ask or challenge it. I'd rather, you know, put it in there and maybe it gets thrown out versus you left the money on the table.
So I guess the concept is to think about fringe benefits, not health insurance per se. It's like insurance coverages as a whole. We only received a small PPP loan, only enough to cover our payroll through June 30. Will our loan be 100% forgivable? You know, it's going to depend on that calculation for reduction in wages during the covered period, as well as reduction in your FTEs during the covered period. Very likely, or very possibly, you could spend all the allotted funds that you were given on payroll, but if you were still in the calculation showing a reduction of greater than 25% compensation or a reduction in your FTEs, there will not be a 100% forgiveness. The calculator is very helpful when, you know, you need to track and then compute that result. The next question is just about our calculator. Is the one on the website, William Vaughan Company's website, different than the one that was emailed out weeks ago? We did email it out maybe the 15th or prior to May 15th. And then what happened was we've got the application and its instructions, like literally that same day. And that application, that SBA forgiveness application, added a whole lot more information to how to specifically calculate FTEs and the forgiveness period and everything like that. So the answer to that question is the one on the website would not be the most current one. We are launching and, you know, releasing our most current calculator this afternoon. And we'll probably share it through email like we did with the previous one.
Yeah, we'll do an email blast out to everybody that signed up for the WVC Insights on the website or was already part of our mailing list. And then it will also be posted to our COVID-19 resource page. So it will be a bit of a living document there. As more guidance comes out and we continue to update it and make changes, or if Congress acts and we have some changes there, we'll be updating the calculator, and the website link will always have the latest and greatest.
Our drivers are paid on a percentage of the load they haul. How does this figure into the FTE wages? The wages, when you're looking at compensation and whether you've had a reduction in compensation, there is two choices: salary or hourly. So in this instance, if they're not hourly, maybe they're salary. But you just look at the total compared to the total before in terms of total compensation and determine whether there's been a reduction. For FTEs, they do expect you to indicate a number of hours on average per week. So if you know they do full-time hours, you know it's 40 because they use 40 for full-time. If you think they're doing a little less than 40, then you're probably going to have to just kind of ballpark, you know, the hours in order to complete the spreadsheet and be able to determine the potential reduction in that case.
Yeah, it's going to go back to a good faith estimate. That is one of the areas that the accounting profession has actually requested for guidance to come down from the SBA and Treasury, is what do you do when you either have people that are salaried and they don't track hours? How do you come up with the number of FTEs? And how do you deal with those types of situations where people are paid by the load or like a piece rate or something like that, and it's not by the hour? So no, there has been no guidance to date. And what Michelle said is exactly right. It's going to be kind of a ballpark estimate. Just, you know, make a good faith estimate, document where you came up with that. And unless we have any further guidance, that's really all that's going to be available. So.
Next question is, are the weeks going to be extended for the Michigan companies that are just going back to work? We've not seen any specific state by state rules. So if we get an extension of the 8 weeks, then it'll be applicable to everyone. And you know, that was a challenge early on, is when to go in and request your PPP loan, because you knew you only had 8 weeks from the date it was funded. And if you're not even operating yet, it might be illogical, but then the other side of the coin was they're going to run out of money. So it was just a crazy game to go in and apply. But this is where we stand now. We are seeing some legislation to expand the number of weeks. So hopefully it happens, and when it does, it'll happen for everyone. All right, this one's a little long. Bonuses were paid in February 2020, so they were included in 2Q19, 1Q20 payroll used for the PPP loan request. Okay, so we did a fiscal year calculation when we asked for the loan. No employees laid off nor base pay reduced during April to June. However, since bonus amount was included in the loan amount, do we need to calculate payroll reduction amount for forgiveness calc, even though no base wages were reduced? Well, looking at the wage reduction calculation is going to look at the 8 weeks covered and what is their annualized pay based on that period, and then looking at February to April and seeing what the pay was then. So the goal is to get back to what you were pre-COVID. That doesn't have anything to do with what you put on the loan request, essentially. And you do have that safe harbor that if you can get back there by June 30th, you won't be indicating a reduction at all. The calculation won't show a reduction. You'll be okay.
That's only if that reduction occurred during that February 15th, April 26th period. I mean, it's probably one of the hardest things here is trying to figure out what periods we're talking about. I mean, you've got the FTE reduction, that you have the selection of multiple periods. You've got what we just said, that June 30th rule, where the reduction has to occur between February 15th and April 26th. And then this wage reduction, really what they're looking at isn't necessarily what you use to calculate the PPP loan, but the wage reduction is really based upon the first quarter of 2020. So January 1 through March 31 of 2020 is the wage reduction period. So as you work through the calculator, work through the instruction, the number of different pay periods, or the number of different time periods, I should say, that are used within this is just really staggering. Very, very easy to be using the wrong time period at all when we're just trying to think through this. So at any rate, point being, not necessarily memorizing all of them, but always making sure to go back to the instructions, because there's so many time periods that are being used within all these different calculations.
Yeah, it's hard to talk about it without looking at it, looking at the numbers, looking at it, on a spreadsheet, to be a little bit easier to follow and keep track of when you're working on it that way. The next question, is there going to be another PPP? If so, when will we be able to apply? Now, my understanding is we still have PPP available. The loan can be applied for through June 30th. So it would be under the current program. You still are able to go ahead and do applications. Whether or not they do some other kind of stimulus, they pass additional legislation, that's yet to be seen. It's possible, but at this stage, we still do have the PPP that can be applied for.
You are looking to do that. Step one is your current banking relationship. See if they are authorized for SBA loans, see if they are doing the process. If they are not, feel free to get in touch with any of us. We do have pretty good relationships with a lot of banks in town that are still doing the S program. So if you have not received a PPP loan or interested in it, I would advise you to move fast. Start with your current banking relationship, and if that doesn't work, just get a hold of one of us.
Under proper calculations of the forgiveness buckets, actually result in up to 100% being forgiven. Under proper calculations of the forgiveness buckets, actually result in up to 100% being forgiven. I'm not sure about the wording of that question, but yes, I mean, if you can use the planning steps that we've talked about to make sure you're spending the money on eligible costs, the likelihood is 100% will be forgiven. Should employee payroll deductions toward health and dental premium reduce the amount we report as employer paid for those expenses? It does indicate that it's the employer's share of the insurance premium. So the answer would be yes. Can't include that part. The next question, I'm going a little quicker because I think we've got 22 more questions, but we can stay here, I guess, and keep answering as many as we can.
Hey, Michelle, I just want to chime in on that last
Sure.
one. So you are going to start with gross pay. So if you've got, employee portions that are withheld, but when you start with the gross pay that you're paying to your employees, that's included in there, you don't have to go out and deduct what the employee portion is. You just can't add it back in on top. So start with the gross pay to employees, then add in on top of that the employer portion of the health insurance premiums, and you don't have to touch the employee portion at that point.
When using temp employees, do they count as 0.5 FTE no matter how few hours they work over the 8 weeks? There is a simplified method that you are able to use. So if you're not at 40 hours and you're less, then it'll treat them as 0.5. That's in our calculator.
The one item that gets very kind of technical, maybe is more of an attorney concept as it relates to temp employees, is, I guess I would call it a distinction between like a PEO, professional employee organization, that is more administrative in nature, and they truly are your employee under all practical circumstances, versus like a Manpower, Job One USA, where they're really that entity's employee and they're kind of a temp. So if you're truly going through a temp agency, our understanding is that the temp agency themselves would be applying for the PPP loan, and you would not be including that temp person on your payroll. So it really gets to that nuance of, is it truly just a temp from a temp agency, or is it truly a PEO that this is, they've been a temp on serving you for 5 years, right? So really getting to the nuance of who is the employer of record to figure out who should be including them in the wages. 9 times out of 10 is pretty obvious, but this question kind of gets after where it kind of gets into the weeds a little bit, trying to figure out whose payroll should somebody really be on. So just consider, is it really a PEO or is it really a temp agency, and which way it should go.
Understanding the importance of June 30 from a payroll perspective, any impact if changes are made subsequently in July to reduce employment levels if business does not support retaining jobs. No, June 30 is the calculation date. So self-employed, S-Corp owner can use health insurance included, correct? Unfortunately, self-employed, S-Corp owner, W-2 employee, you're going to be limited to your $100,000 of wages or self-employment income. And it also limited to that figure, even if it's less than $100,000, you can't include health insurance or retirement plan. If an employee took a voluntary unpaid leave, will we be penalized for them having a wage reduction? That came out in the newer interim final regulations, that if you document that you offered someone their job back and they chose not to return, if they left on their own accord like this, or if they were fired for cause, that is not going to harm you when it comes to either the wage reduction or the FTE reduction.
And you actually get to still include them in the calculation. You don't exclude them in the calculation. You include them in whatever their full-time equivalency level was before they left.
Our calculator really helps when it comes to those situations too. What about S-Corp owners' spouses who are employees and receive less than $100,000? Is it okay to include their health and retirement expenses? You know, a lot of times we look at S-Corp owners 2% and greater, and we do include family members in some of the fringe benefit treatment. But in this case, it's owners. We've not gotten anything that said you have to also look beyond the stock ownership and include family members. So that would mean you can count their wages up to $100,000, and you can count the employer's health premiums and retirement plan payments for somebody who is not an owner. Is the max of $15,385 include wages and health insurance? It depends if we're talking about an owner or not. You know, you could have a staff person or an associate or somebody who's a professional making over $100,000. Their wages would be kept at $15,385, but the employer can also include their health insurance and their retirement. But that's not true if there's an ownership or if it's the self-employed person that we're talking about. Is there a way to count employees as full-time even if they don't work 40 hours? Or employees are scheduled for 40, but if it rains and they don't work, and that would put them under 40. So officially, you're supposed to put what is the average number of hours they're working per week during these covered periods and during the first quarter calculation period. So there's really not. If they don't work the 40 and they're hourly, then you have to use those hours. Will accrued payroll in fourth quarter 19 for book purposes and paid in 20 limit the forgiveness to the 2019 W-2 basis? I don't think that's going to matter. Forgiveness is going to be what we pay during the covered period compared to, you know, what their wages were in 2020. But, you know, if there's more to that question, we can definitely answer that offline. Does mileage reimbursement count as a utility? If gasoline does, you know, you can get as crazy as you want, but I guess if you were to look officially at the mileage reimbursement, I bet you there is a factor that's supposed to replicate or represent the gas portion of it. In the end, I don't think that is what it was intended, but ultimately, you know, there is some gray area with it. I have new hires that are due for a 6-month raise. Will this be included in the PPP? You know, again, it depends on what you're paying and when you're paying it. So if you give them the raise during the covered period, there's going to be more forgivable costs. Since stay-at-home orders, we are reimbursing employees for home internet. We were not paying for that as of 2/15 because it wasn't an issue. Is it okay to include this in the utilities? In my opinion, they probably did have their internet contract on February 15th, and I would include it. Also have that documentation in your files for the expenses you're paying. Can you address voluntary terminations and the impact on the calculations? I think we covered that a little bit. As long as you're documenting the situation, that it was no fault of your own, then they should not impact you negatively in the calculations. Do you have to reduce your health insurance premiums the company paid by the amount withheld from employee wages? And the answer to that is yes. You don't have to reduce their wage expense, but you do have to reduce the health insurance costs that the employer is paying by what the employer didn't pay. How soon after the covered period should the forgiveness application be filed? You have quite a bit of time to get it filed. Once it is filed, the bank has like 60 days to review it and submit it for forgiveness. It depends on the situation you're in, specific to when you want to get it filed. Do you have any other thoughts?
Currently, there's no due date on that. So it's kind of open for any time during the year 2020 currently. And then as Michelle said, yes, the bank has 60 days to get back to you and tell you, yes, you get that for a given amount or something different that they've come up with.
All right, it looks like we have 26 more questions and we're at 2:05. Do we suggest we could just continue? I can continue. People need to jump off, they can jump off, but Kate, were you?
I can do a few more minutes, then I'm gonna
Okay. Would
premiums? We'll be
premiums?
doing a recording of this. We will be providing a recording, and we can also reach out to everyone with the questions at the end. If the ones that we don't reach, we can reach out to on a personal basis.
Absolutely. We'll get them all covered, no question. Would premiums for group disability be considered an employee benefit that would be included? We talked about that briefly, and the answer would be yes. The challenge there is that if your employers are in your group, you probably should include the entire premium because you're not supposed to take that for owners. If the time to use PPP funds are extended, will the $15,385 max be increased as well? I think it's $100,000. So yeah, I would expect theoretically it would, you would allocate it or annualize it. If the owner does not receive a paycheck but his health insurance is paid, how do you document this? Well, health insurance wouldn't count anyway, so not sure if we would need to. Idle grant is not forgiven. The idle grant will reduce the amount of your PPP forgiveness. So if you were given $1,000 or $2,000 and your maximum forgiveness is $20,000, they're going to drop it to $19,000, you know, and bring it down. Can you email a copy of the PowerPoint? We will definitely email the PowerPoint and the video. State and local taxes are those payroll expenses. It's the state unemployment premiums that the employer pays. That's what we include. What is the treatment of the forgiven amount? Below the line, exceptional expenses. So I'm thinking this is, you know, do we get to deduct the expenses we paid that were then ultimately forgiven for income tax purposes? The answer is no. The IRS unfortunately came out and said those payments that you make that end up being forgiven are not deductible. When this original program came out, they said your loan proceeds will not be taxable, but they didn't state anything regarding the expenses. And here is how it's played out. But in the end, I think it's not that harmful. You're still in a better position from a cash flow standpoint. You know, if you've got a $100,000 loan, you've got that probably because revenue is down $100,000, give or take. So ultimately, then if you don't get to deduct the payments you made, you're still got an income tax situation that's $100,000 less. That's the end of the questions. Maybe I skipped some, I don't know, but we'll make sure and capture them all. Thanks.
Michelle, I'll just add something quick on that one from a financial statement perspective. Yep. So if you're looking at your financial statements, the forgiveness amount will show up as income on your financial statements. You won't put it up with your revenue from your operations. You will put it down below the line as far as an other income item. So not an extraordinary item, but it would be an other income item that would not be part of your operating income and operating net income.
Thanks for that point, Kate. That concludes our webinar today. I'd like to thank Kate, Mike, and Michelle for their insights and perspectives on today's topic. I'd also like to thank you, the audience, for attending. I'd like to reiterate that the recording will be available along with our enhanced PPP loan forgiveness calculator, along with the presentation materials. They will be available to you via email shortly. Please look for correspondence from our team. If you have any questions, I encourage you to reach out to the team or to reach out to the firm in general. Additional webinars are in the works, and we hope you will join us again. Thank you, and have a great rest of your day, everyone.
Thanks, everybody.
Thanks.